Hi guys, good day everyone. I hope we are all well, and I hope you've been accumulating some pips. And if you haven't, I think very soon, sooner or later, you'll start to accumulate some. And my name is Njabulo. Thank you so much for taking your time and watch our videos. And I appreciate your time, and I hope these videos will be of essence to you, and it will help you in your trading journey. And a special welcome to our new subscribers. Thank you so much, guys, for subscribing. And please do spread the word. Don't be tired to spread the good news. And I hope that you'll tell others about our channel. And there's a link in the description below of how to talk to me direct on Telegram about other stuff that I do, and only based on trading, only based on trading, strictly trading. So as for now, I trade V75, and I saw someone said, some people in fact say, why not Nasdaq and gold and USDT? So that's something else. If you want to trade that, then we can discuss that privately. Do not mention. Let's not discuss that on the comments section below. Uh, uh, Contact me direct with the link to below that will take you to my Telegram space. Okay, today I want to talk to you about this topic: trading with the trend, applying order block. Trading with the trend, applying order block. And how do you trade with the trend, applying an order block? And what do you do first before you start to put your sell or your buy? Number one, always start on a higher time frame for structure business. Start on a higher time frame for structure business. For example, let's say this is our V75 on monthly time frame. Then we have this structure that is broken. Okay, let's use something bigger. Something bigger. We have this, and then with a break of market structure on a monthly time frame. Then on H1 or M15, you are likely to see something like this, something like this, something like this, yeah. And okay, so and then again, we are being shown this example every day, everywhere. This example, expansion, retracement, expansion, retracement, expansion, and a retracement. But what I want to talk to you about today is to capitalize on this retracement. Is to or capitalize on this retracement. This video will not be long, so please pay uh, attention, and then let's focus on this thing. Okay. So number one, I said start on a higher time frame for structured business. Number two, I said determine the market trend, whether you are on bullish move or bearish move. Okay, so number three, then it's where you have to start to immediately after the break of market structures. It's where you have to highlight or indicate or show your order blocks. Then in this instance, we'll go a little bit deeper. We have to differentiate between an order block and institutional candle. In this instance, we'll use order block as institutional candle. Okay. So in an event that we see something like this, we said this is our break of market structure, and then we have an institutional candle down here, the last price prior to this move here, and then we are still waiting for price to come down to respect this candle, and then shoot back up again. But suddenly price don't do that. Price just comes here and then move up again, and then retrace a little bit, and then move up again, retrace a little bit, then move, and then fail to take this higher, and then suddenly price come down to this institutional candle here, and then now I want to talk to you about this, how to capitalize all with these moves here, 1 2, and then there's a major move here. Okay, I want to talk to you about how to capitalize, in fact, from here, 1 2 3 4 entries, and then this entry also here, and then come down here. Remember, this for a monthly time frame, and then on H1 we have some moves down here. We have some moves up until down here. Okay, so I want to help you understand how to catch these retracements here. Okay, so um then the fourth thing that you should do, um you have to look if the structure, or if the previous structure was taken out by the swing high or the swing low, the previous high or the previous low was taken out by the new swing. Did the structure form the swing, or did it take the previous high, or did it take the previous low? Okay, so for for you to see that, like an example here, this is a new high that failed to take out this high. Okay, this here, this is a new high that failed to take out this previous high. But how then to capitalize from this move down here? But, because if you have your order block here, price will not instantly come here. Then on my monthly time frame, you might even wait for months, or 3 to 4 months, and then you see price suddenly came down here. How then to capitalize here? Then this is what I want to talk to you about in this video. Okay. So we have a move uh like this. Okay, let's let's not need to use that. We have this move high, we have this low, then we have a high, and then we have a lower high, and then we have a high. As you can see, it's clear that this high took out this uh previous high here. So we always expect price to come down here, but what if price come down here and then shoot up? What do you do then here? Do you wait for price to come down here, or do you trade with the trend, applying another block in between here? And then also we have a high, we have a low, and then we have a high, and then we have a low, over low here. Price failed to take out what this previous high here, and then what do we have? An OB here, that we still expect price to come and respect and then go down again. But how then do we capitalize to the move down here that will come and respect this institutional candle that is somewhere down here? That is what I want to talk to you about. Okay, let's go to examples now. Let, let's go to examples now. This is V75. Let's go to our daily time frame. Okay, we'll just pause it here for now. Okay, what do we see here? This is on daily time frame. We see the break of market structure here. Okay, we see the a break of market structure here, and then where is the institutional candle? This down here. Now it's our institutional candle. This down here. Okay, then our mitigation order block. Where is it? Where is the candle that pushed this price further to here before it came down here? Because we couldn't wait for price to come all the way down here before we buy. Let's see uh, where all the move happened. Is down here. Okay, so how then do we trade with this trend using an order block? That is what will determine. First, now look, always take the last bullish candle prior to the move down that left an institutional candle that pushed for the break of market structure. I will repeat it again. Always look for the last up candle for the structure that was broken up bullish. Always look for the last up candle prior to the move down that left an institutional candle that pushed for the break of market structure. And where is that candle? Is this one. Okay, let me not highlight it now. Is this candle here. So I always said in a smaller time frame, whenever you see two consecutive candles, always highlight them both, because on a bigger time frame than where you are is just one candle. So in this instance, I'll just take these two bullish candles. Uh, Remember, we have this institutional candle here where we have our big buy here. Here, our big buy, and then see what price came. But anyway, we'll come to this. Let's start here. Then what then do we do with these candles? Since we did highlight them, let's drag our rectangle further. As you see, we have a clean break of market structure here with this candle. Price closed above with a body, not with a wick like here. This is a wick here, and then this is a body here with a wick. So this is a break of market structure. Then we waited for price to come down here, but in the meantime we have to go with the trend. We have to go high, and then what do we do? Wait for price to come into these candles. Yeah. Okay, we have to wait for price to come into these candles, of which we do see this bearish candle, just one bearish candle, and then this bullish candle opened with a wick inside these candles. Yeah, so this was our buy, and then our stop loss just below this rectangle, and then in here we will have been in the money. Had we seen this, then we would have been on the money here. So with that said, where then do we put our stop loss and where is our take profit? Our stop loss, as I said, it's below this candle here. That's our that's where our stop loss is. It's below this candle here. And then our take profit, if we have a previous high somewhere here, and then that previous high will be our take profit. But in this instant, we do not have a previous high. This was our new high. So we had to be on break even up until here. This is what it is to trade with a trend using an order block for the bullish move. This is what you should have determined. But again, we have this move that failed to take out the previous high. And then again, this move did not come up to our institutional candle here. Does this then means that we lost everything? No. And then what do I mean by that? Okay. Take now the last bearish candle. Okay. Prior here, let me not confuse you. Here we took the last bullish candle prior to the move down that left the institutional candle that led to the break of structure here. Okay, so here this high did not break this previous high here. So which candle are we gonna use now in order for us to catch a move down? We take the last bearish candle prior to the move that failed to take out the previous high. The last bearish candle is this one here. Let's draw a rectangle. Let's drag it further. Let's pause just here. And then where do we drag this rectangle up to? First, let's agree that you have a break of market structure right here. Okay, in fact, you don't have to agree. We all see that this is a break of market structure here. Nothing to argue about that. This is a break of market structure because this candle closed below the structure with a body and a wick, not just a wick only, but with a body and a wick. Therefore, we pull our rectangle further to our right hand side. Okay, let's pull our rectangle further to our right hand side. Price, after it broke this structure, it came up back to this candle to come and mitigate what this candle again. Price came to what, to mitigate this last bearish candle prior to the move that failed to take out the previous high. So price came immediately here and then it pushed down. This is a sell to buy, but I will make a video. I'm not sure it's either today or sometime next week about that. About sell to buy. Okay, so that's what we see here. We see a sell to buy here. Okay, so I'm discussing now if you about the trading with the trend, applying an order block, not other things. The sell to or buy video, I think it will follow shortly, but not today, not now. Okay. So again, then again, we go with the price. We do not have to be against the current price direction. We do not have to trade against the trend. We always have to go with the trend. Like always go with the trend. That's what I always say to my people or to the people whom I trade with. Okay. So if the previous high is not taken, always take this last bearish candle prior to the move that failed to take out the previous high. But if it is broken, take the last bullish candle prior to the move down that left an institutional candle that push for the break of structure. That's what you do. That's what you do. Always we trade like that. Okay. So in this move here, I do not want to explain this for now. As I said, this is a video for another day. Okay, so we have this high here, failed to take out this previous high. So what then do we do? We have this last down candle before the move up that failed to take out the previous high. Let's see. Okay, all right, let me put this here. Let me highlight first the break of market structure. The break of market structure is here, and then we'll put this candle here. We'll put this candle here. As you can see, the break of market structure price came back to mitigate this candle here, and then it pushed down. So that's how it is, guys. That's how easy it is. Like, that's how easy it is. It is very easy. It is very easy. And then again, it needs some practice. We always have to practice. And then for this move down here, we clearly see the break of market structure here. Then the last bullish candle prior to the move down that left this institutional candle here. This here is the last bullish candle, and then when we drag it further, we see the break of market structure here. Then look at this week here. Look at this week here. And then this might sound so confusing. Why? Because we only have a week and a week here, but here we have a body that started where inside this candle. It only came with a week here, and then it pushed up. So this was our entry. Our stop loss was just below here. And then again here we have a break of market structure down here. We have this move, we have this high that failed to take out the previous high. Then what do? We highlight this candle all the way. Okay, let's take them both as I as previously I did explain why. Then price broke the structure and it came back to it opened up here. Yeah, it opened up here. So price broke the structure and it came back to mitigate this candle. So now expect price to go down. This happens, you catch all this move while you're going where to your institutional candle, which is down here. So that's all that there is, guys. Or then for a bullish trend, it's an opposite of this bearish trend. For a bullish trend, it's an opposite of this. So that's all that you have to see. And I hope it was helpful. As I said, this video will not be long like the previous ones, and I hope you get something. If there's something you need to add, please feel free to comment on the comment section below, and I'll leave my link that will take you to my Telegram. And thank you once again for taking the time to watch this video. And if you haven't subscribed, please do so. I will really appreciate that. Okay, guys, I'm out. Cheers.